Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.
Welcome to Stockwatch with me, Simon Brown, and joining me to unpack your stock-related questions today, Schalk, Louw, PSG Wealth, Old Oak, David Shapiro, Sasfin, Securities. Be sure to send your questions through via email, stockwatch@bdtv.co.za, SMS 41392, or on Twitter @BusinessDayTV, hashtag Stockwatch. Gents, appreciate the time. David, you're newly back, so I'm going to throw the first question to you. Gold. Now, to put it in some perspective, it's only down 7%. It's only back at levels from 10 October, which was 12 days ago. But I got to say, it feels a little more violent than that.
Simon, just by the way, Simon, I think you should maybe just tell David first what happened to gold. I think
it went up for 9 weeks in a row.
Maybe just help them.
I watched it, but I think what concerned me is that I can understand the reason to buy gold, which traditionally has always been related to inflation and price increases and so on as a hedge against inflation. But this time it just broke away, and that concerned me. And just looking at that chart, you knew this is not going to end nicely. It's going to come back to a level where, once again, central bankers and those people who really want to look for an alternative to the dollar will start to come in. But at the moment, it just looked like everybody just wanted to get onto the, to the train or boat or ship, whatever you want to call it, and go for a ride. So this has got to kind of just unravel a bit. And gold shares as well. It just looked too dangerous. And it's just observing these charts, which, when charts go up like that, or when a share price or commodity price goes up like that, it's going to correct. But I don't think this is the end of the gold story. It will find a balance a little lower down.
Schalk, do you agree with that? Not the end of the gold story, just an interruption, which is, to be clear, what markets do. Nothing goes up in a straight line forever.
Yeah, 100%. I'm definitely in David's court. How does the saying go? If it sounds too good to be true, it often is. I mean, so today I open up the newspaper, or what do they call it these days? The internet.
The website.
The website. I open it up, and I see gold plunge more than 6%. The biggest fall in a decade. If you look at silver, not too much better. That's the biggest drop since something like 2021. So it's immediately when you look at this, you get this fear factor feeling. But then again, you need to sit back. I mean, up to the previous day, gold has actually increased by 13 point, close to 14%. That was just for October, so it's the 30th of September. I mean, so yesterday we lost 6%, odd percent. Hoo-ha, we're still up over 7% for the month. We're still up over 60% year to date. And there was good reasons why it's happened. Why did we see the retracement yesterday? That was the interesting part. I mean, there were so many people that gave very intelligent answers. I just think the easiest answer to yesterday's movement, there was more sellers than buyers. That's the bottom line. We've seen this massive increase in the gold price, and I do feel to a certain extent, as a gold bull, that it's maybe done a little bit too much too quickly. And I think we've just seen some profit taking going about, and I wouldn't be surprised if we test a little bit lower lows, but I don't think this is the end of the gold run. Let's call it the investment thesis for why you should be exposed or invested in these precious metals. It's still there.
You've got to get rid of the weak holders. Whenever you see this kind of run. There's always investors who are trying to make a quick buck, or so got to get in, and a lot of people gear themselves up for it. So I think it's good to just have a sell-off like this, scare off those people who haven't got the appetite, to hold on for longer.
Yeah,
But I think, let it go. Let it run for a bit. It'll come down, find a level. But I'm with Schalk as well. I don't think the gold story, this whole worry about the debasement of the dollar, I don't think that's over yet.
Yeah,
So,
my wife asked me, and to be clear, my wife knows nothing about markets, but she does have some gold in her little Shift app, and she says to me yesterday, should she sell? And I said, but what would you buy? And she's like, I'll hold on. So, yeah, she's not going to be a weak holder by any stretch. So let's go to the other big story of yesterday. David, the Foschini Group, TFG. That was, do we call that a horror update?
There's something more to it. I'm not a great believer in the apparel retailers. I'm very nervous of them. I think everything has changed, and particularly Foschini, which is focused at the top end of the market. If I was forced to go into retailer, I'm a ShopRite, Boxer, Pepcore type person. I think that's really focused on where our market is. But there's a worry there, and the fact that they had to write down stock so much, which may be because of a very warm winter or whatever the reason was, but it scared me a little, and I'd be scared of most of the apparel retailers. Wherever we look now, Simon, there's warnings about the consumer, and just take heed of that. Recognize that, despite the fact that gold price is strong and platinum price is strong, I think consumers are still under immense pressure here. And you've got to recognize that, particularly at the top end of the market. I think where Foschini's focus, yes, they've bought Jet and they've got some exposure at the middle to lower end of the market. But it scared me, yeah.
Schalk, is Foschini the canary in a coal mine? Because yesterday in Sympathy, we saw the likes of Mr. Price and, heck, even We Buy Cars getting sold off.
Yeah, you mentioned the horror day yesterday. I mean, it's been a horror year for Foschini Group.
Yeah.
I mean, they're down year to date something like 40%. And we need to put that in perspective, because if we turn the clock back exactly 1 year ago, and we've had this, us three sit around this table, have a conversation on these retailers, or specifically the clothing retailers, there was this massive optimism. There's this thing called two-pot system. Mm-hmm. People talking about 50 billion being pumped into the South African economy. And where's this money going to go? Well, it's going to go to the Foschini groups. It's going to go to the Mr. Prices. It's going to go to the Truers. And eventually people are going to buy some food. So it's going to go to Pick n Pays and ShopRites. And there was this massive optimism. Yeah, we're sitting 1 year later and people realize, wait a minute, the money didn't really flow. People actually, they're still struggling. Like David said, it's not an easy environment. If you're sitting in an environment where more than a third officially of your country is sitting without jobs, and unofficially, if you look at that, it's close to the 60% mark, then people are struggling to buy clothing. Let's look at the positive. I think just one thing that stood out for me that I found very, very interesting was the online sales. We joked about websites and those kind of things. Online sales, and that has grown over 55%, and now making up close to let's call it 15% of the total retail sales. It just shows you the trend where let's call it the younger generation is going. I don't want to say the younger generation because a lot of people watching this program will say, "But hey, I am 55 years old and I'm buying online. Come on, stop calling yourself." Bottom line is you can see where the new trends are going, and 15% of total sales coming from online sales. That is really, really good.
Yeah, okay.
Some of the younger generation are still Cheyenne, whatever it is, even with the increased duties. There's so much that you can buy cheaply there, and I think Foschini are there, but I think generally more and more people are buying there, sitting in office hours, looking at the sites and buying clothing, and it's disposable clothing. So I think all the big brands that we used to look up to, I think they must be battling.
Yeah, it is a point, and it is that price, but also disposability of it. Schalk, famous brands numbers out this morning. Not too bad. The stock's up a little bit today, and this used to be the darling of the QSR. Of course, my sense is that Spur has kind of taken over. Thoughts on famous brands for you?
Yeah, I think it's fitting. Having this program on Wednesday, let's call it the Wacky Wednesday show. Yeah, I mean, for listeners out there, when we're talking about the likes of the Steers and Debonair's, what's that fish company, Fish Away.
Yeah.
I mean, it's great brands, and looking at the revenue growth, I thought it looked pretty good or stable. I mean, let's call it your 5-6% year-on-year growth is not bad. I mean, looking at the general, the debt seemed to be coming down. It's what do I call it? Boring is beautiful. It was just a sort of a boring set of results. But I mean, to our point to the Foschini group, if you're struggling to buy clothes and you're struggling to make ends meet on that side, you are going to not be able to really buy your takeaways as well. So I think the same scenario that we've actually sketched in the previous, or let's call it on the Foschini group, do apply for famous brands as well. So looking at it from that point of view, I thought this results look pretty solid. And when you look at the outlook, they mention it very clearly there that they are carefully optimistic looking at the next year. Hopefully looking at our inflation numbers that came out just an hour or two. I mean, there was a beat. So hopefully we can, by the 20th of November, get a bit of a early Christmas present from the SARB. If we see a bit of a drop there. Yeah, I remember. I can hear it already.
He's a mean man. He's not going to.
Come on, David. Inflation was 3.4. David, Spur, famous brands, either of them interest you? Wayne would always choose Spur for the onion rings.
Yeah, but I like Spur. I like both of them, and I think the same with Foschini. I think we must qualify what we've said. This is not management. Mm-hmm. They're very, very well-run businesses. I think particularly Foschini. It's you go into the shop, superb, but it's the economy that's against them. And I think when you get to your quick service restaurants, the issue is that they've got to handle the increase in electricity, which goes up faster than gold, and they've also got to handle inflation, meat prices, whatever prices, vegetable prices, whatever, and they can't pass it on to the customer. So it's a very difficult environment in which they're operating. But good businesses, you can't fault their restaurants. You walk in there, you don't run out. They're well run, but the company's against them. Yeah.
It's a tough market, and that is the key point, and we're learning it fast. So let's go to the big question. I've had a ton of questions around this. Schalk, you were on air when we initially touched on it, Optasia. We now have some details in terms of listings, which gives us some sense of valuations. My sense is not a dripping roast, but Schalk, Optasia, which IPO closes, Monday? It's invite only, listing on the 3rd. Great to have a new listing. You putting some money into it?
And every time I hear this name, it feels like I'm watching a Disney movie. Sounds the same story. Optasia. I mean, okay. So it's definitely not price-wise a Disney movie. Mm-hmm. I mean, when you look at the fair values that they're talking about, anything between $1.5 and $2 billion. So if you put let's call it a valuation on that, on the numbers that they've been giving us thus far. You're looking at a P multiple around about anything between 20 and 27 times. Yeah. Now, here's my disclaimer. Massive disclaimer. Coming from the person that's been saying for pretty much 20 years that Capitec is expensive and struggling to get on in. So please don't listen to me. This is one of these companies. It's got a great story behind it. It's got all the buzzwords, AI, and it's got micro lending and telco. Yeah. Fintech. It's got all the buzzwords. It's a stunning concept. They've got great names behind this company. So this will be something that I'll definitely be monitoring, and I will most probably be surprised again on the upside. What was it last year? Was We Buy Cars, totally blew out of the water in terms of original expectation. I think this company bar that we don't see some massive pullback in markets in general, I do think that this company will be most probably oversubscribed and really an exciting listing.
David, some Optasia for you at that sort of mid-20 PE?
Knowing absolutely nothing about it, just reading kind of the first paragraph, because when I opened the newspaper yesterday, there were 2 full pages of very small print there, especially just still getting over jet lag. But I think, as Schalk says, I think the concept is good and it appeals to South Africa and it appeals to young people, who don't want to go into banks and do everything they have on their handheld. And I promise you, it's the kind of listing that's going to attract huge amount of interest. So even if you're a punter, what did we used to call them, a stag?
Yeah.
Because we haven't had listings for so long, I've forgotten all the terms. But, this is one you can stag. You're going to make money on it. As Schalk said, with We Buy Cars, and believe me, when the Coca-Cola company comes on as well, it's also going to be a company that roars. Simply, we're so starved for new businesses that this will take up. And it's a good business, but we got to learn about management. We don't really know the people that are running the business, even though it's been in private equity hands. And it's something that I'm always avoiding. I'm not saying they're bad. I'm just saying you want to learn about the company. We're learning about We Buy Cars now. It takes you a bit of time to understand management, see where they're heading. So, but go for it. Definitely. You get shares, take them.
Okay.
Let's just take the positive. Let's just take a positive for a second, because you actually touched on a very important point here, David. I mean, we've been so focused over the past few years about the delistings. How many companies has been moving away from the JSE? This is horrible. This is negative. We're losing so many companies. Well, this is now the second big listing. I mean, Optasia, I think we had two weeks ago, and yesterday we had the SAB, that's HPC announcement.
Coca-Cola.
That's going to be a 45 billion secondary listing. I mean, this is massive, and I think really great for South Africa and great for the JSE.
And that I concur. And I take the point. David, I mean, Optasia, I think it's maybe not cheap, but maybe it's going to pop. I think you're probably right on that. A bunch of questions coming through. One in particular asking around Netflix. David, offering value aside from the Brazilian issue. Results look good. Did you ever look at the Netflix numbers? They don't give me subscribers anymore, and that offends me.
No. I just looked at the numbers. Without the issues in Brazil, and they're good. They're starting to, there's advertising coming through, new products coming through, streaming, gaming, and all things like that. So I thought it was a good result. I know they have it. This is, it's like Aspen. We still don't know the issue with Aspen. What was the big issue with it? And in this case, they haven't really announced the issue with Brazil. We don't know if it's masking something or covering up something. But I'm surprised that the market dropped like 5-6% after hours, and that I would have thought there would have been. They would have favored management, say, okay, let's hear more about this Brazilian problem. Is it ongoing? Is it going to affect future earnings? But take that away. I thought it was a solid result.
Yeah, Brazil's about 600 million. It was, I mean, they told us about it, but they never quantified a number, and they certainly hadn't sort of included it in their guidance. Schalk, for you, I mean, it's off 7% aftermarket. I mean, it's still up 60% for the last 12 months.
That's it. I mean, you just sort of summed it up in literally one sentence. I mean, it's done well. I mean, you look at a similar EPS last year, this time around about $5.40, came out $5, close to $5.90. I just can't recall again. But I mean, it missed. I mean, they expected close to $7, and when you mentioned 12-month return, more or less 60% year to date, they're up over 40%. Then you need to hit the ball pretty slam bang in the middle of the sweet spot. If you're not going to do that, unfortunately, if you're going to miss, you're going to have scenarios where we're going to have a pre-market. So let's see.
We always set our wealth from the highest point it reached. We forget about where we started.
Exactly.
Where were we? What have we got? We lost money. Well, we're down 6%, So forget about the 60% that you made.
Yeah, my gold is down 7% and it's hurting me. I take your point on that, David. Question coming through. Novo Nordisk. David, I know you like Novo Nordisk. Stock's been under pressure. You still like it? The talk that the US administration wants to sort of do price fixing.
I must tell you something. When you watch TV in South Africa, all you see is sports betting and booze. Sports betting and booze. When you watch TV in America, it's, what do you call it? The ambulance chasers, those lawyers advertising. And the other is Ozempic and Wegovy. Everybody uses those drugs, and if they might not need it, but they still want it. So it's a big area. It's a massive, massive area, the weight loss. But I can't understand the share. The share price performance, I think, is more related to the company as well. You saw that the chairman just resigned now. They've had a lot of issues, which have been more administrative issues. The one thing is that, Novo Nordisk is 10% of the Danish economy.
Yeah.
If this company goes down, Denmark sinks, Trump can come and buy it for nothing soon,
Actually, I hadn't thought of that. Schalk, here's a stock that's 60% down almost in the last 12 months. Could I interest you in some weight loss stocks?
Weight loss stocks. Yeah, it's a difficult one for me either. I mean, you could clearly see that there's some problems. You don't get that amount of board members, and as David just said, the chairman stepping down, a lot of other board members step down if things are going well at a company. So definitely they've got their issues. I don't like these drugs, Simon. I'm just maybe old school. I'm really worried. Using diabetes type of drugs to try and lose weight, it's just, to me, it just feels wrong. So yeah, but again, I started off the show by saying there's going to be a few people being mad at me, and I think there will be a few people more. But it's just not a company that interests me, not at all.
Question coming through for you, Schalk. Schalk likes luxury. Please ask him about Richemont.
Yeah, no, I must say it's been a call that's been kind to myself. I was sort of contemplating 2 weeks ago, should I go for a second time around an LVMH, and boy, I'm glad I did. So I mean, very, very similar to the LVMH story, and I think maybe more important is you can see that the US Swiss talks, on tariffs are. It seems like it's going well. We don't have final verdicts on it yet, but it seems like things are going well. And in fact, they can sort of get this on the way. This is going to be really, really good for the likes of Richemont. And then Richemont is also very, very strong on the Chinese side. And when you look at LVMH's results, which we called 2 weeks ago, the results came out last week, Thursday. The one thing that stood out for me in the LVMH results was things in the sales in mainland China seems to be doing very, very well. Now, remember, Richemont is a little bit bigger in China than compared to the LVMH, so that could be good for them as well. So it's not that the dripping roast it was, let's call it a year and a half ago, but I'm not selling my Richemont. It's just such a quality company.
David, this was my Crystal stock pick, but unfortunately you started the competition a week after it jumped 15% back in Jan. Some Richemont for you?
I still like it. I still like luxury. I think if you've gone through LVMH's results, Hermes came out today, L'Oreal, things are improving. I think that perhaps the market had greater expectations, but and maybe set the bar a little too high for a recovery. But China's coming back into the picture. Most of the areas are doing fine. I like it. I wouldn't sell my Richemont.
Yeah, no, I've learned that lesson. You don't sell the Richemonts. Let's go to stock picks. David, you're going with Airbus Aviation.
Yeah. The simple thing is that for reasons that I had a lot of family affairs, I had to make 3 trips this year to the United States, and I go via London. So that's 12 different on and offs. Every one of those flights was packed. The airports are packed. So when you look at Airbus, the demand, and you can use Boeing as well, I prefer Airbus. I think the demand for aircraft, there's only a Boeing and there's only Airbus. I think that demand is going to continue for new aircraft for a long time. The only downside is supply chain. In other words, access to engines and getting those things. But I mean, the demand is there. The order book is incredible. You want a new aeroplane, I think you've got to wait like 5 to 10 years, for new aeroplanes. So I like, and they're also in a bit of defense. Yeah. I think I haven't thought of aviation now. We've been so obsessed with AI.
With AI. But you should go look, there's a
good one.
There's a Brazilian company making aeroplanes, Bombardier, I don't know what they're called, something or other. But Schalk, you're going with...
If you want to go to the game reserve, you're going with Bombardier.
Baby ones. Schalk, Sasfin for you.
Yeah, here we go again. My disclaimer. I think it was my first or second. My first stock watch call earlier this year was Goldfields, and then I gave Sasfin the kiss of death. I called it at $80, and I think the next day it was something like 71 or 70 bucks. So be careful with this call. But I mean, when you look at Sasfin, I mean, same thesis that I mentioned earlier this year still applies. I mean, we've seen the company go up to close to 130 rand levels. Month or so ago. It's now again trading at close to a 30% discount to its 5-year average P. Such a cheap company currently. When you look at the consensus, Bloomberg consensus is currently seeing it around about 75% higher. And this recent pullback is making it attractive for me. So this is more let's call it a trade, because I'm still invested in Sasfin. But I think if you haven't acquired your Sasfins yet, I think these 90 rand levels that it's now pulled back to is making it attractive again to buy into.
Okay, under 100. Schalk likes it. We'll leave it there. That's all for Stockwatch today. Thanks to our guest, Schalk Louw, PSG Old Oak, going with Sasfin. David Shapiro, Sasfin Securities, going with Airbus. Up next, the close.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.